So I'll start with you, Rod, and so you can introduce yourself, and then we go from there. Please.
Jeff, I think you have to take the cap off. Hi everyone, my name is Rod. I am the Chief Innovator of Beehive Labs. Essentially what we do is the hard part of crowdfunding, and that is kind of building a crowd altogether. A lot of businesses and individuals, while they may be very good at doing it on a personal level, it's very different on a business level altogether. And I'm really grateful that Sydney invited me here today and speaking with these very influential speakers here with me today. So hopefully we'll get to some questions and start up a discussion. Thanks.
Hi, I'm Tim McKillican. I'm the president and founder of Open Avenue. We're a real estate crowdfunding platform based here in Ontario, as well as a registered market dealer. I kind of fell into the real estate and crowdfunding world about 6-7 years ago. I was looking to get into real estate investing, and I wanted to get into it. I'm not a handyman, so I had to scour my networks to find some partners, and came across some individuals in Kitchener-Waterloo who I started working with, and we started doing single-family home to duplex and triplex conversions, renovations. And the first deal, we bought a house for 120 grand. We put 30 grand into it, and 6 months later it was valued at 220, so we walked away with 60 grand. And I was hooked on real estate and wanted to continue on. And so over the years we moved on to small and mid-sized apartments, and had a lot of success doing that. And I realized, well, why don't we start bringing in some external capital for some of these deals? And so my background is computer engineering. I went to University of Waterloo, so I was like, well, I'll build a platform and start doing that. And little did I know, entering the whole securities world and the regulatory world, there's a lot of work that goes into it. So I started working with Brian Kosak about a year and a half ago to wade those waters and learn a lot, working with OSC on our registration. A lot of dialogue back and forth on what we were doing to move capital raising online. Looking to automate it as much as we can, or could, while still maintaining all the compliance component and making sure that investors were protected, and at the same time being able to efficiently raise capital. So we built that platform, and we're just about to launch and getting going there. So pretty excited about equity crowdfunding and looking forward to it.
Wow. It's great to meet you again, both of you. All right, so, wow, my voice gets pretty loud. I just came back from another event that I was just speaking this morning. I guess all of us were here. We have a Canadian flavor to this. I love the US, don't get me wrong. Great comments, great things that are going on in the US as far as what our crowd is doing, Community Leader and others like Offerboard and Circle Up. But the reality is this is Canada. And if it's gonna have any meaning to you today, you need to understand the landscape here. And Canada is a great country. I know everybody thinks we're 10 times smaller than the US. We're not. We're about the same size geographically, I think. Population, yes, we're smaller, but we do have some interesting challenges that need to be taken into consideration that the US and other jurisdictions around the world do not have. And the first one is the most important one. We have 13 securities regulators, not one, 13. You gotta love that number 13. And I respect all of them. They're working hard. We have one of them here today, this afternoon. It's not an easy task for them to deal with this discussion of equity crowdfunding or selling securities over the internet. But it is coming, and it is here. And this discussion today will be based on the Canadian landscape. As far as myself, if there's anything you want to know, I don't want to spend the time telling you all my accolades or anything like that. Just Google me, or you can go to LinkedIn and find me. I'd be more than happy to share information. I have a free ebook on equity-based crowdfunding that you can download. It's free. It will help you no matter what country you go in the world on what you need to do to get ready. So it will help you as far as this discussion is here that we're going to have. So this discussion we're going to have with this panel with Rod and Tim is going to be very interesting. It's a discussion that happens often, and it often gets very confusing because people use this word crowdfunding, but if you don't split it into their little buckets, it gets confusing on how you can use it. So for the purposes of this discussion, I understand Brian Kozak asked you earlier whether you knew the difference between, equity-based crowdfunding, debt, donations, and rewards. So I'm not going to go through that right now. But for this discussion, we're going to talk about rewards-based versus equity-based. And this is important because okay, so Mike is there. You don't need one. I don't need one. So the rewards-based crowdfunding has a lot of opportunities for people to use. And as far as what Rod does, the implications are the same. But as far as the company is concerned, they're very different. And so we're going to start with the rewards piece. We're going to go through Rod. I think he touched on a very important subject, which when I first talked to Rod about crowdfunding, it is one of the key ingredients. And I would say that in rewards-based crowdfunding, building that crowd is a critical element. So I would like for Rod to kind of touch up on that, how he's building that crowd from the rewards-based environment, because we're going to move into the equity side to go back and forth. Because what I want you to take away is how do you do it for either one, and where do you bring them together so you can actually utilize them as a Canadian company. Okay, Rod?
Thanks, Oscar. I'm going to definitely keep my points very straightforward. I mean, social media is a huge, huge topic. But essentially, I guess the one point that does marry along between both is actually emotion. Social media is about emotion. If anyone tells you otherwise, they're really full of baloney. It's about what you make people feel, or how people feel when they're interacting with your brand. Now, I would bring that into the discussion, and as well as I'd like to kind of tap into the point that with equity crowdfunding now, the emotions are still there, but we're just dealing with a much smaller group of people, I would say, individually. But overall, for both, what's important for the crowd, at least, is to create momentum. Momentum is also a very important term, and this is the part where a lot of individuals who approach us essentially on a daily basis typically have campaigns that they want to be, completed within a month. And I mean, it's already too late. I mean, a campaign should take at least 6 months to a year to really start developing a crowd of people that are sympathetic, or that enjoy or like your brand, or enjoy what you do, or support your brand altogether. And hopefully we'll have a chance to tap into and develop that subject matter a little bit more in detail as we go along.
Just one question there. So I know you talked about the rewards, obviously building the crowd 6 months. Have you had experience both with rewards and equity, them coming at you at different times, or are they always coming at you when they're just about to go live?
I wouldn't touch something that just is about to go live at all. And I think from the cases that we have worked, they have been over a period of time, I would say over a year, and I can definitely kind of tap into like one particular client that deals with a crowdfunding portal in the food industry, for instance. And she's actually very wonderful. Unfortunately, she's not here. She's a Canuck living in New York. Her name is Cheryl Clement, and her portal is called Fund a Feast. And she's been very successful in building her community. The challenges she's been having has been in terms of actually finding the right portal for her community altogether. And by the portal, I mean the platform itself. But in terms of having a client that is actually very engaged and involved with the community that she has been building, of course with our assistance, I think she's done a great job in terms of actually connecting with individuals. Ideally, what we want clients to see social media to be is to be like a prospecting tool altogether. And it leads to a face-to-face interaction. And if you cannot connect those two between, like, what would be your sales funnel and what a social media platform can do, it's very, very difficult for you to actually see a return from an investment in social media altogether. And this is the part where, I mean, we've actually encountered cases where there's some clients that prescribed even some psychotherapy altogether. I mean, you kind of uncover a lot more depth in terms of like wondering why some individuals struggle with social media altogether. And there's some issues that are that surface sometimes with some clients that are interesting for us to see. I mean, us as a company, we're obsessed with the idea of what makes friends. what not only makes friends, but what builds trust between people. And these are two questions that drive us within our lab ourselves, or at least that's what we're stirring up in the back lab in terms of, what would facilitate these relationships to happen, and where, I mean, we're at a point now where we're anticipating like where the support level is going to be now. I think someone mentioned conversion rates earlier on. We like the term conversion rates, but at the end of the day, the conversion rate for us, from an equity point, I would say, would be to actually connect with individuals. Very similar to the way I met Sydney, actually, we connected on social media, and now we've actually kind of created a relationship from that. And this is the part that a lot of people forget to do. And sometimes it really breaks down to having some time management and kind of dedicating some time, because individuals really want to connect with people at the end of the day, and it's how people make you feel. So I'm not sure how you guys are feeling by the way I'm talking today. Maybe I can change my tone of voice, sound friendlier, sound nicer, but that feeling that you have is very, very important, and it's also very difficult to do at 140 characters at a time.
Well, that's a good point. So hang on to that. My voice is loud enough as it is. So, the thing about social media, and I'm going to come back to the both of you, it's just that I see the deliverable, I see these providers, and I'm sure we all have, but there is one fundamental flaw I've seen, is that people assume that you know the strategy for them. Are you also piggybacking them with the, and I want to stay in the reward space because I think equity is very different. It's regulated, so therefore you don't have the same luxury of where in rewards you can say just about anything. Are you working in the strategy, or are you just seeing they're just coming at you and here it is and you deliver?
Well, I would beg to differ on your point, Oscar, that equity and rewards, they're different in some regards, but the relationships are still the same. We're in the building of building relationships. Now, the nature of that relationship, or how that relationship starts, that is not regulated itself. What's regulated is when you're exchanging information of the opportunity itself. We're in the business of connecting Oscar with Gerald here. That is our business. Whether or not you guys two transact into business, that's really what we would push you to do, but at the end of the day, we're more concerned about you having a relationship with Gerald and connecting with him. And what was your other part of the question? Sorry.
That's good. Obviously, I believe that in social media, we're seeing this in Canada in particular with portals. They're taking it upon themselves. They're building their own crowds, and just because you're acting as a third-party provider.
I can actually share an experience too with the bank actually, and the bank, they don't have the securities commissions. They have IROC, which kind of controls pretty much everything that they're allowed to say. And it's very similar to the real estate world, REBA, which is controlled pretty much who actually is allowed to talk about the house and whether or not it's a financial opportunity. And the solution that we created there was we created an ambassador program where essentially we said to the bank, hey, we're not going to be speaking as the bank, we're going to be speaking as people that endorse the bank. So in other words, the model there is much more powerful than, let's suppose that Oscar is the Bank of Oscar here, and he contracts us, and we speak as the Bank of Oscar. And our argument is that it's a lot more powerful if Rod is saying to go to the Bank of Oscar, as opposed to the Bank of Oscar saying come to me. So these are kind of things that we're tapping into, where essentially the endorsement is a lot more powerful than the actual brand itself speaking to themselves.
Well, Tim, I guess is there rewards play, do you think, in the real estate? I mean, this is an area that you know.
Absolutely. I think it's a national reward.
But in the sense that it's being used where people get, the whole idea of reward space, there's something that they can.
Yeah, in equity crowdfunding, in real estate in particular, you have that pride of ownership, or that tangible asset that you own. So you may live in a certain city and say, well, here's an opportunity to invest in a certain building that, and the crowd says, we think there's an opportunity for urban grocer. And I want to invest in that. I think it's a huge opportunity. I see in Kitchener-Waterloo, for example, the tech workers are flocking downtown. They have nowhere to shop. I know that they have a lot of disposable income. I think it'd be a great investment. So I want to invest in that. I see that opportunity. They take the power away from the Bay Street financiers that are typically investing in these real estate investments and put the power back in that community. So now I have that reward where I own that tangible asset. I'm helping out myself. I'm helping out that community. And at the same time, on the equity side, I'm an investor. So I have that opportunity to profit from it as well. And it's what we're trying to accomplish with Open Avenue is investors can be much more connected to their investment. So from a transparency point of view, I can log on to my account. I can view what the real-time rental income is. I can look up my insurance contracts. We could even do something like put a 24/7 webcam on your project so that you can follow along as it's being built or see what's happening and get connected to it in a much more transparent manner than you might not be able to do today if you invest in a REIT or a pension fund that has real estate exposure. So I think that the reward component is definitely there, and that's what we're trying to capitalize on. That doesn't necessarily exist in the investment opportunities today. So.
Okay, so, but just to come back, because I don't want to confuse everybody that rewards and equity, I agree, there is a reward in equity in general because it's tangible, you see it, there's a return. But as far as in the true sense of rewards-based crowdfunding, I personally don't see that there's an opportunity there. I could be wrong, that's one of the questions. Do you have any thoughts on that? Or I see it from an equity, there's a reward, I get it. But could you put a real estate deal on a Kickstarter Indiegogo? I know it sounds a weird question to ask, but believe me, it's one that gets asked daily everywhere.
Well, right now, no, because it's a security. So whenever you're governed by, or you're creating a security, you're governed by all the regulatory rules and regulations and securities laws surrounding it. So no, you can't just throw something on Kickstarter or Indiegogo. Yeah.
What about something like fractional ownership? That's not security.
Sure it is. Sure. Yeah. That's what we're looking at doing with Open Avenue. But anything where you're entitled to a share of the profits or a monetary interest, it'd be considered a security. So you're not governed by.
It's just a right to use, isn't it?
Well, it depends what you're entitled to. Are you an owner and you want a share in it?
Sure. Yeah, you're right.
Well, then it's, yeah.
But it could be. But could it be just a right to use? In that case, it wouldn't be a security.
But I guess that's the whole point of what he started with. And I think what I was trying to draw here, I think, is there has to be a clear distinction between, and here in Canada in particular, we need to draw this line fast because otherwise too many Canadian companies are making some horrific errors out there. And I'm not going to go too much in detail because we got a regulator here in the room, just joking, but you cannot be selling securities on Kickstarter and Indiegogo. You cannot. You cannot even offer them the ability for future securities. So you have to mature your skills in understanding what you can do in one area and what you can do in the other. So the reason I brought real estate, because it is
I'll talk a little bit about that. So to sell a security, you have to be registered as an exempt market dealer. So you have a lot of obligations from a securities point of view and a compliance point of view. Conduct KYC, so know your client, verify their identity, know your product, so know what you're selling, do your due diligence around it, make sure there's no misrepresentations, and as well as suitability. So we have to have a conversation with each client. Make sure that the investment's suitable for them, for their individual circumstances. So what are their individual financial objectives? What's their net? We can't just automate it across the board and get it done without even looking at it. Each individual, we have to look at their individual circumstances, and that's part of our obligation as an exempt market dealer. So Kickstarter and Indiegogo, they're not registered. They don't deal with securities regulations at all because they're not selling any entitlement to a profit or a monetary compensation. So there's quite a big difference, and I think there's as the industry matures, people start to understand that. But I mean, I was the same way when I started out. I didn't realize the whole securities component around that, but it is quite substantial.
It's a regulated regime, and so even though there's hurdles in the Canadian sector with the searching regulators, we do have equity portals operating. So this is important. I mean, it's great to hear Scott from our crowd They're number one, fantastic, all the power to them. But we do have portals. We have Seedups in Calgary, seedups.ca, and it's unfortunate Sandy couldn't be here because you should hear her. She's there for you. She's there to help startups. She is like Tim, working through with an exam market dealer, because this is how you can operate these portals. We also have another one here, right here in Toronto, called the OCMX. Unfortunately, Matthew McGraw could also not be here today to be with you. And we also have InvestX out of Vancouver. So we are seeing an emergence of these platforms, okay, appearing. But make no
Oscar, I
mistake.
just want to add to that.
Sure.
And just by show of hands, how many entrepreneurs are here that are interested in kind of entering to this space here?
I think there was a few.
Okay. I mean, don't be intimidated. It's a very tiny world. It is very, very small who the players are. And I mean, you have a number of them in this room actually right now. And actually, we invested in a whole, community that we've been building inside the crowdfunding community as an area of interest. And what we found is that it's a very, very tiny community in terms of who the players are. And Oscar's actually very, he's here, and he's definitely one of the authorities in the area, as well as Brian and Sydney. I mean, these gentlemen here, pretty much, it's that whole like 7 degrees of separation. Well, with these three gentlemen here, and gentleman right here with the BlackBerry camera here.
I'm just taking pictures.
It's a tiny world, is what I'm trying to say. And you know what? You will get kind of introduced very quickly to these individuals, and they will put you in the right hands. And Oscar has an amazing platform that does a lot of that already. So,
thank you. So, coming back to the Canadian sector for you. So, the takeaways for you is from an equity side, portals do exist. I realize, and again, it's unfortunate you couldn't hear more. I mean, these are Tim's colleagues that have worked hard to get through the regulation process, and they've done so. But there is a problem in the equity where we don't see this in rewards. And I don't spend a lot of time on rewards-based crowdfunding. I spend a lot of time in regulated-based crowdfunding. This is the only area that I speak about, and I create ecosystems for them. So I'll give you an example. There is a platform that's going to launch here in Canada and in other jurisdictions, and it will go out with a full-blown ecosystem, meaning that it will have the lawyers, the accountants, the third-party providers like Rod, consultants that will help you make sure that you met all the requirements before you went to the portal. As Scott here from our crowd said, most of the opportunities that go there have to go through a stringent due diligence. So there's no sense of going to a portal and applying if you're not ready. And this is not a checklist where somebody says you got to here's a checklist of 100 items, and you go, I got 75 done, I'm ready to go. No, this is 100 and go 101. This is regulated crowdfunding is serious. These guys are not going to risk their licenses to help you raise money in case there's an issue with your opportunity. There's no background checks done. So you have to be ready for this. And these service providers are going to help you. Rod is going to help you with the social media. Your lawyers are going to help you structure your deals properly, because unlike any other country in the world, Canada does have one particular law that has not changed, and you have to check with your lawyers. That's your 50 shareholder rule. This 50 shareholder rule can be a very big pain for you if you go try to raise money in the United States or in Canada and your company does not go public. So it's imperative that you speak to lawyers to help you amend your articles of incorporation, bring shareholders agreement to protect you and future investors. So it's one of those things that you just don't jump in, and there's a planning phase, and you need different types of experts to help you all along the way. And today we just talked about the high level, of course, but if you need more, you can reach out to Sydney and others.
No, speaking of that, I mean, and I'm going to have the audience of your videotaping about life and crowdfunding actually. And I'm thank you. You're one of the, speaking of those leaders, experts, you're one of them. You have seen the business models in England. A couple of years ago, people, they come from England, they want to start shops, then they went to the same regulators and they said they cannot do that here. So I like the fact that you mentioned this is Canada, and you're a Canadian company, and you know what business model around the world has been working and not working. But I want to ask you, But we know each other for a couple of years now. Where are we at? Where are we at in Canada right now? Where are we at this time? What is your optimistic as an entrepreneur? And yeah, where are you at now?
So I love Canada. I'm a proud Canadian like all of you. Most of my business is done elsewhere. Cindy is correct. I'm speaking in most of the countries around the world, even to securities regulators with Brian Kozak and others. In Canada, wow, I don't know where that came from.
Chilean accent.
Yeah, Chile. In Canada, we have a bit of a problem, and I'm going to make sure that you never make this problem. Don't be shy to tell people what you do and be proud of it and pat yourself in the back. There's no shame in promoting yourself and promoting what you're doing. And why do I say that? Because Canada has had the oldest rules to operate securities selling over the internet, the oldest rules. And I kid you not, in fact, the British Columbia Securities Commission made an announcement late 2013 letting everybody know, why do we need equity crowdfunding rules when we already have the offering memorandum? And they're correct. So sometimes you don't have to look far, it's right here. So I remind everybody every single day that there is a way to crowdfunding, and yes, you have to follow all the regulations. So where's Canada today? So I mentioned the portals we're operating. So the Canadian portals today, they're operating with 1 or 2 deals at a time. Unfortunately, that's not instilling too much confidence in the market at this early stage. We're hoping that this will pick up. There is another problem we have in Canada. None of the portals are sharing any of their data to the public. So unlike all the other portals around the world, where they close a deal for $100,000, they tell the whole world. I wish I could tell you exactly how much has been raised in Canadian portals, because none of them are sharing any of that data. I hope future portals like what Tim is doing, and any of you here who choose to do that path, please be more forthcoming, because crowdfunding is about a crowd. You keep it to yourself, that's exactly what you will be by yourself, and a crowd does not work that way. So I'm not trying to downplay that they're not doing great work, it's just this is where we are. That doesn't mean that these portals couldn't do the work for you, certainly not saying that either. I encourage you to contact them if you have opportunities. Seedups, InvestX, ECN, Optimize, OCMX, and Silver Mako Ventures. Sorry, I forgot our British Columbia. So, and more to come. There's 10 more portals coming when regulators go through the process of approving. So I hope that doesn't discourage you, but it tells you we have a lot of work to do to catch up. But the beauty of this, it can go viral very quickly, and once it does, we're caught up just like everybody else.
No, and I want to say, Tim, that you're doing a good business, because I was there when Julian did the Realty Mogul. She got $500,000 from David Rose to us, and now it's a multi-million-dollar also patch of land. So you're going to be the first one in Canada doing the real estate crowdfunding platform?
First.
So what are you going to be online?
Very shortly, probably the next month or two. We're just getting our platform all sorted out, and yeah, ready to go.
So you're all regulated? I mean,
Yeah, we're registered as an exempt market dealer, so.
So what are you going to do for a secondary market? What happened when one of these people invest in your platform that they want to sell?
That's a good question. I mean, it's the next step, but yeah, right now you can only really sell back to the issuer, or I mean, through the dealer to another accredited investor. So yeah, the secondary market's a huge issue, and something that we'll definitely be focused on.
Yeah, that's the problem.
We have two now.
Yeah.
We have the TMX that launched, and Equitas will be launching soon. So we didn't have that before. It is limited, of course, but I think as far as liquidity, I think our crowd has touched on it, that they've had success. This is kudos. There's not always going to be that type of exit, companies going public. I think what we're going to see is a lot of acquisitions. I think we're going to see a lot of private equity groups aligning themselves with equity crowdfunding portals and real estate portals to look at deal flow, because this is the best deal flow. No different than Circle Up, is partnered with Johnson & Johnson, Procter & Gamble. I think I see a lot of exit through M&A.
I think real estate's a great asset class for crowdfunding because there's natural liquidity. We can put in our partnership agreement, we're going to sell in 5 years, and we just throw the property on the market and exit the investment. So compare that to a traditional startup where you either get acquired or you IPO.
Actually, that's a good point.
So, and that's part of the reason why we're focusing on real estate. Because
So you're the first, are you going to be any debt or just equity?
oh, debt too, yeah, both types for sure.
Okay, they just, for that, in America, just a couple of companies, just in the last 3 weeks, they raised about $40 million.
Patch of Land has been very
That's one of
successful.
them, yeah, and the other one, the Realty Share.
Realty Shares,
Some
Fundrise,
Asset Avenue,
Mobile.
which is
Yeah,
a great
Asset
avenue.
Avenue, yeah.
They're open now, I like both. But, you know, I wanted to tell you, I appreciate, you know, Rob, you have a lot of companies in America too, and I've seen that. We want to wrap it up here, but I want to ask a question. If any have any question here, we can take one question or two.
Well, before the question, I just want to throw one point out there. I mean, you don't need to wait for all of that regulation to start your social media efforts.
I disagree. Yeah, I disagree. Sorry, I come from a regulated world.
Yeah, no.
Don't even touch it until you
Yeah, exactly.
talk to a lawyer.
Don't listen to these guys.
Just can't offer the security. Yeah, no, you cannot.
You can't offer the securities. I offer
But you can-
relationships.
yeah, you can-
That's a whole other world
You
over
can
here.
tweet,
okay?
yeah, your next.
Big distinction.
No, this is a, no,
By the way,
yeah.
here's the consequence.
Yeah.
So here's the consequence. He doesn't go to jail.
Yeah, exactly.
He doesn't pay the fines. You do.
Yeah, I know.
You'll go to jail.
Yeah.
You'll get fined by that.
I'm glad you were.
And you'll be banned from being an officer and director,
Yeah.
potentially. And if you get caught doing it in the United States, they don't wait to come after you. They'll put you in a beautiful orange jumpsuit
That's fine.
to make an example of you.
That's
Okay? So I don't get around it.
Yeah, exactly. You know what? I
Sorry.
came to your office a couple of years ago.
You know me.
And I came when we were talking about regulation. And I learned another thing. Compliance is a king. This is an industry in all around the world. If you don't know what you do, if you don't have any, don't work with your fine line, CPA, you got to be out of it. They're going to shut you down. And you know, I really, and that's true. Here in Canada or anywhere.
Anywhere else.
Yeah. And they have a question over here. No, ma'am, we have to say that to you. I think we answer your question.
This is just a simple question for Tim. Do you people invest asset by asset, or you pool the assets?
Yeah, it's
Or
an individual
people-
direct investment. So that's kind of how we differ from a REIT. That you can
Yes.
pick the exact investment. You may say, I want to invest a small amount in something in Toronto, a small amount in some of the oil fields, something in Montreal, wherever you want, however you choose.
Could you have pooled if you want? Could you have a fund that was pooled and then?
We're not planning on doing that to start.
But there's no technical reason why you.
Well, you could be construed as a fund manager. There might be some regulatory implications, but to start.
You know what? I want to tell you, a couple of these people, including Julian Morelos, they started with our conference, also Carlo with and they become millionaires. So you will be an ex-millionaire. Don't forget about us. And because this real estate crowdfunding, truly, you know, they were there and they started real estate crowdfunding. Is one of the things is that it works because it's a tangible asset. You still have to do the regulation because you know you have to those, you know, in America they have to do that, you know, PPM and all those, you know, lawyers and all things. But the biggest problem is that I see it is secondary market. What happened? One of those investors wanted to sell, you know, pay the college kids and some other thing over there. They need to do that. But let me get one more question. Weird question.
You mentioned a handful of different platforms that are coming online. You said OCMX, Silver Maple Ventures, InvestX, etc. Two-parter. One, are they mostly going after accredited investors? And if so, what's the end game for the economy or for startups that are looking to get investment through crowdfunding?
Sure. So Seed-Ups is actually using the offering memorandum. So that means that if you're not familiar, most Ontario residents are not. The offering memorandum exemption allows, in particular in Alberta and a few other provinces, people that are not accredited to invest. It's a smaller amount, but it's a larger pool of investors. InvestX, I believe it is only accredited. OCMX here in Toronto is accredited. Now, I should mention, these are live. They are live today. You are going to use the accredited investor initially. we're all going to move eventually to the offering memorandum, which is great, because now you can tap into 28 million Canadians versus 1.4 million. Those are the only accredited. But the exit, I mean, you know, that gets asked a lot here in Canada, and it's interesting. Everybody talks about the secondary market. I think real estate has got that built in. I think Tim nailed it there. This early stage companies, they're always going to have that difficulty, whether it was through an equity portal or, you know, the traditional way of raising capital. What I do see, though, is that more companies will stay private longer, and they will use crowdfunding as a means to raising capital in different stages. We're seeing that already in the US. Early stage company raised like $500,000 about a year and a half ago, and now it's back to the market, tune of over $10 million. So, and they're not even going public yet or selling out. So.
You're not going to go to jail if you hire me, okay? But as an aside, the reward-based, perk-based is also very useful for the equity as well, because it's where you could essentially kind of test your product out. So it's a very useful tool for investors before they come in at the equity to see that you've pre-sold X amount of products, similar to the cases that Brian brought up earlier, actually, with Pebble Lodge and Wafu over here. He definitely was a successful candidate. So don't underestimate our perk reward-based crowdfunding prior to the equity-based as well, okay?
Yeah, no, actually, this is set the stage for this panel, was reward versus equity. And I'm one of those believers that a lot of people, a lot of VCs around the world, they're looking at your site like Kickstarter and other as a market validation. Yeah. Even before they come to any money, they go over there and see how much money you can raise. And also not only that, so I'm very much a believer of perk, but for data. They put the watch or some other product like Cooler Scooters, they get from feedback from the audience, you know, for crowd out there, if you do it better. So it's more of a crowd collaboration, and that's what is happening. So this you have a final word here?
Yeah, no, I think that's a good point, and I think it started that way, where VCs were actually pushing it that way. They're not doing that anymore. So I want you to know it backfired on them. And you can imagine how it backfired on them. It backfired on them with Oculus. It backfired on them on a number of deals where they didn't come back for the money. So what VC would put a deal on Kickstarter and Indiegogo that they're interested in, and all of a sudden it goes haywire, just like Neil Young's Pongo. Yeah. He took private equity money and said, goodbye, I'm just going to go the crowd alone. So I do agree with the reward base does have a value. Please be careful with it. There is what I call the fraud bill. It's non-regulated, and every single time there is a success, you have to look at that and measure it and say, that's what, you know, Coolest Cooler did. Now we got to take it to the next step, because what worked for them isn't going to work for you today. And you're among millions of opportunities there, so you really have to pay attention to that. So make sure you line your strategy up in advance if your product even fits the reward space rather than equity. You may find that it may not be as good as you think. I deal with too many entrepreneurs that did that, and now they're wondering why they can't raise money in equity, because it does have a flip to it. Right?
Okay, well that concludes us. Thank you very much. Great panel. Thanks, Tim. Good luck to you. And Rob.
Thank you.
Thank you. Oscar very much. Thank you.